Okay, so we're going to jump right into it today. Um, this video is going to be about entries at channel lines as well as um, how to enter on stock market and limit order markets. And we'll just kind of see how many examples we can get into this video. So we're actually going to start off on talking about profit targets as well as stop and limit order markets here. So what I have going on here is what I think is going to end up being a channel fade, and we don't really know for a fact if this is going to fade or not, but we're going to find out. We're going to see how we enter on it, if nothing else. So what is a channel fade? Well, channel fade's real simple. I'm not going to go into too much detail because I'll likely do a whole video just on channel fades. But once we've identified a channel and we've identified a break of a channel with at least one bar holding outside the channel line, we can begin to look for shorts again. So let's see what we have here. We have our first entry short here. Now I'm on playback connection here, so I'm going to go ahead and let the market push forward. Now, first entry short is always nice if it happens, before the 20 EMA, and maybe we can get a second entry at the 20 EMA. With that being said, though, it doesn't always work that way. And so what we want to do is we want to just try to find a good area, really. We can use measured moves for this. We can say, okay, well, maybe I can find a place of support with a measured move. Looks like we're already just about past it. Pretty much invalidates any measured move. Okay. Pause right here for a second. Now, if we're entering in a stop market order, we want to first identify a potential signal bar. This is a potential signal bar. Could be better. But just for the sake of an example, I'm going to go ahead and I right click. We're going to click Sell Stop Market. And then we're going to take our order and put it one tick below the current low. And we're just going to let it play. Let's see if we get filled. We do get filled. Stop loss here, one tick above. Where is our profit target going to be? Profit target is going to be the previous low. I generally use the bar bodies just because it tends to be a little bit of a stronger place to be entering. And then from here, we just simply sit back and relax and let the market do its thing. Now let's just say I didn't get filled here. Maybe there was another bar that pushed up a little bit higher and I still felt like it was a good signal bar. Then I would simply take my order and I would raise it one tick, two tick, or however much I needed to. See if we can't speed it up a little bit here. Boom, just like that. Okay, I actually didn't play that previously. It was just kind of a lucky guess. Good little trade. Sometimes it comes back against you like this. Let's count bull entries, shall we? This is the first entry for the bulls here. We made a new high, so let's see. This is the first pullback, so this is going to be first entry for the bulls. What is the probability of them having any success on the first entry? It's kind of small. So we're not worried about first entry pullbacks. Okay, let's go over another example, and this time we'll talk about how to enter on a limit order. So first things first, we need a first entry. Remember, we've broken out of the channel now, so we need a first entry this is not a first entry, because if we extend this line, you can see this bar is still halfway on the line, so this is not an entry right here. We need at least one bar, being this bar, to hold outside the channel at a minimum, and sometimes that's not even enough. It's very subjective how many bars outside of a channel that you need. It's just something you have to get the feel for. This is touching the channel line. This is not a first entry. Still waiting on our first entry. Okay, let's see what we have here. It's our first entry short. Just let it play out here. There's a pullback. Oh. So we're getting kind of close. We're looking to enter on a limit order. So I'm going to go ahead. I'm going to sell limit 4. Whenever I initially put the order up on the board, it doesn't matter if I'm doing a limit order or a stop market order. I want my price to be really, really far away from where the current price is. As an example, if you notice here, price will have to break to a new high for the day for it to hit my order. Can't forget that it's there. It's really important. That being said though, if there's a news event that I forgot about and we have sudden volatility, I know that there's probably likely to be at least some bears up here selling, which will hopefully give me a small delay before I can reach over and cancel my order. And that goes for stop market or limit orders. Okay, so let's slow it down a little bit here, closer to real time. I don't know if we're going to get triggered here or not. Once again, I did not go back and make sure that this was actually going to be a winner or not. Speed it up just a little bit here. We did break above the previous bar's high, which means that we now have a first entry, and now we're in a pullback. So next time we break below the previous bar, we're going to be triggered into our second entry. Still waiting to see what happens. Speed it up just a little bit here. Not a bad little signal bar. Could be better. Let's see if we actually get triggered. Oh. Just put it back to real time. We're getting real close here. We need one tick. One tick is all we need. And there we go. There's our tick. Now we're going to enter on a limit order. We have the choice, right? We can enter someplace here. If we feel like we're not going to get filled, we can enter here, one tick below. Now we just need price to retrace. Hits our order. Where is our profit target here? Profit target is previous low. Now you can use it to get filled. You know, in this case I got filled about where a stop market order would be, but you can use a limit order to get one or two ticks better of a price. Of course, the biggest risk with limit orders is not getting filled. So sometimes too, if I'm only having to risk like an extra tick or two, then I'll go ahead, place my stop loss above all the highs instead of the lower high. If it's like an extra point or so away, then I'll just keep my stop loss here, one tick above the current high. Okay, let's see how this trade turns out. You know, it's not too bad for, I mean, really kind of goes to show the effectiveness of a strategy if I don't even need to find out if this trade is winning or not. I mean, I don't suggest you just blindly take second entries, but sometimes it does really actually feel that easy. Sometimes it is, and sometimes it's not. Anyway, channel, fade, first entry short, pull back, lower high, second entry short, yields pretty good profit target. How many points did we make again? Let's see here. We made about 5.25 points. So for anyone who's just going for a standard, 4 points, there's nothing wrong with that. But when you have a clear profit target, and anytime you're dealing with channels, the profit target is almost definitely the previous high or the previous low. Once you set valid profit targets like that, then you can milk so much more out of the market. Even if you just took an average of maybe a point, point and a half, point and a quarter on each trade over the course of a year, all those trades really add up and makes you more money overall. So we have a clear profit target. Go for this profit target, no matter how much it is, 6 points, 8 points, whatever. I mean, I had one this week that was like 13.5 points. That's a lot of points. That's almost passing a prop firm account in a single trade. And we can find trades like these all the time. So don't be afraid to find a profit target and go for that instead of just a standard 4 points. If you're ever confused, feel free to go for a standard 4 points if you're risking 2 points or around that area. Okay, second entries at channels. Let's talk about that again real quick. So before I kind of gave an example just based on essentially how the day or how the previous day had gone. And the previous day had a lot of this, where the 20 EMA acted as a relatively strong support in the middle of a channel, and it kind of ended up bouncing in the middle a lot. And that's fine. I mean, the market does that. Oh, but my favorite trade actually is when I have the 20 EMA and the channel line together. And so I wanted to find a few more examples like that because that is the ideal setup. First example here, I'm kind of close to it, but I don't quite have it. But it's okay, because if we look at things, we can see that we are currently in a small range. Adjust this a little bit. So once we've identified our range, we know that we're in a channel already. Once we've identified our small range, we need to be able to position ourselves in a pretty good spot. It's still a channel, but it is a range within a channel. So if we take a position here, we want to make sure that our stop loss is outside of the range. No matter what we do, if we find a second entry that triggers up here towards the top of the line and our stop loss is placed somewhere in the range, it's just too 50-50. I mean, we don't want to pull the slot machine and watch what happens. We want to have some kind of an advantage, and we want to have several layers of protection to our stop loss. And if we keep our stop loss outside of the channel, we'll have the channel lines, we'll have the range lines, and depending on the situation, we might have the 20 EMA as well. So let's take a look at this for a second. We're in a channel. We had some previous 20 EMA support, but now we've developed into a range. And we say, okay, well, we're not really interested in anything here because it's still middle of the channel. We have to play this as a channel and as a range. But if we wait just a little bit longer, we can push through and we can find an entry at the bottom of the channel here, at the bottom of the channel here, and at the bottom of the range here. So let's count our entries real quick here. We have our bull channel, so we're only looking for longs. First entry long here, pull back, second entry long here, just 1 bar of separation. And what do we have? We have 2 key entry points, channel line, range line. We just talked about our stop loss a whole bunch. Where does it go? Let's move these out of the way a little bit. Where does our stop loss go? Our stop loss is going to go 1 tick underneath here. And if we look at it in situations like this, where I can just move my stop loss 1 more tick and it would be under everything's low, then I'll go ahead and do that. If I have to risk an extra point or 2 to have my stop loss right here, then I'm not going to do it. I'm going to go with my original stop loss. But in a situation like this, the difference is only like a tick or so. So if you want to place your stop loss here, you absolutely can. If you want to place it here, then you can do that as well. For the sake of this, I'm just going to place it in my normal spot. So our stop loss is outside the range. Let's change colors here. I was thinking a nice ugly red for a stop loss, because if we get stopped out, it's not fun. So therefore it has to be the color red, right? Where do we take our position at? 1 tick above the previous bar, so here. And keep it blue. So our position is here. Where is our take profit? Take profit is up here. We'll make it green for take profit because it makes you feel good inside, right? We like to take profits. Okay, that's our take profit. And once again, I generally use the bodies when it comes to my take profit more than the wicks. I mean, you know, you're going to have people on both sides of the coin saying one is valid, more valid than the other. You can use either one. It's fine. I've just kind of developed a habit over the years of using the bodies because I just feel like that's where the strongest area is. So that's our take profit right there. So this puts us in a pretty good situation. Once we do pass a 20 EMA, especially on bull bars like this, we have it as a support, so we have to break it to actually go even lower. Now, if you really look at my situation here, you might say, well, this is a cool trade and all, but you have to bet on a break of this range in order to take this trade. And in this situation, then yeah, I mean, you're right. However, we have pretty good evidence that the range is going to break here soon. I mean, we're at a key entry point, being this channel line. If it's going to go up at all, it's going to be now. If I get stopped out here, market's probably just reversing. Well, I'm okay with getting stopped out on a reversal because now at least I know which direction the market is heading. I would rather get stopped out because I was dead wrong and I can then change my perspective to the correct perspective than to be stopped out from volatility and not know if I was right or wrong, or even worse, being right and still being stopped out. Okay, let's go back to kind of where we were a second ago here. Actually, after a big push up. And then we had a reversal. When do we know that this channel is no longer valid? Let's take a look at things here. When a channel breaks, we have to expect that there's still going to be bulls trying to put it back into the channel. We have to find proof in the market that the market is reversing. So what do we look for when there's a break of channel? We look for a channel fade. Okay, let's see what we got here. Push down below the channel. I'm going to get rid of these lines for now. Here's our first entry long. First entry long here. Pull back in a second entry long. And what do we have? Oh, we have a trap. A very nice trap at that. Once we have this happen, and for those of you who are getting really into measured moves, we can say that, okay, well, let's see, that's a measure. Let's just say that, where's a pullback here? This is the new measure. You could say that, okay, well, maybe we want to wait for a second entry around a measured move. And that's fine if you want to wait for that. For those of you, I haven't really talked about measured moves. Don't worry about this part. But once you've identified second measured move, and so now we're here, like so, and we say that, okay, this is the measured move. We should look for bulls to buy here. Okay, fair enough. Here's our first entry long at the measured move. Pull back, second entry long, right here. Bulls who took this here, let's identify their stop loss. Stop loss is going to be here. Maybe some of them will be especially aggressive and have it here, but most of them will have their stop here. Where is their profit target? Profit target is going to be the highs here. It's a long ways up. We can get there. The question is, do we? And the answer is no. We get about halfway. We had this big push up. We had a channel fade. We had a channel fade here. 1, 2. Now we have to ask ourselves, who's profitable, bulls or bears? In this case, it's going to be the bears. The bears are profitable. Taking the market lower, bulls gave up here. Now once we hit our profit target, once we realize that the bulls or the bears have hit our profit target, or hit their profit target, or gotten stopped out, in a situation like this, we know that bulls who tried to fade did not hit their profit target, and bears who tried to fade did hit their profit target. So after this point, it's really best to wait. Let's go to playback connection one more time. Just let the market go and see what happens. Speed it up just a bit. Speed it up a little bit more. We're really just waiting for the market to pick a direction now at this point. We could take this here and we could move it. We could say this is now our channel. Pause for a second. Let's see here. Break. Let's see what happens. Climactic bull bar. Why don't we enter on this? Let's enter on a stop market order. Oops, there we go. Market moves really quickly on playback. It can be hard to get filled. Where is our profit target? It's the low. Boom. Okay, y'all, I am just about out of time today. I will probably be making another video on channels and entries there at some point, and still lots and lots of videos that I do have to make. So keep watching, trying to produce one as much as as often as I can. And if you have any questions, as always, just hit me up on whatever way of communicating with me you have, and I'll be happy to answer any of your questions.